Hello friends, welcome to Finnobo. Since January 2020, gold prices have increased by more than 20% both domestically and internationally. Gold is at the 9 years high level. In India, gold has crossed rupees 52,000 mark and it is still rising. Let us know the reason behind this rise. India and China are the world's largest importer of gold bars, jewelry and gold coins. India imports nearly all of its gold requirement from foreign countries because mining gold in India is not a viable option. When coronavirus broke out in India, lockdown was imposed in March. As a result of lockdown, people were restricted to their homes. Many social gatherings like marriages and parties were not organized. So people did not demand gold. As a result, gold import fell by 99% in month of April and May. India annually consumes around 800 to 850 million kilograms of gold. Even in foreign countries, gold demand fell sharply. Because of low demand, prices of gold started decreasing. In international market, between March and April, price of gold fell from $1,680 per ounce to $1,470 per ounce. As you may know, 1 ounce is equal to 28.35 grams. After recording a fall, gold prices started rising, breaking the 9 years high, and it is still rising. Let us see the reason behind this rise. The price of gold in India depends on 4 factors. Because we buy gold from international markets, the price of gold in international market matters. Because we pay for imports in dollar, the dollar-rupee exchange rate also matters. Hey, I have a video on why dollar is the king of currencies. Don't forget to check that. After importing in India, taxes are imposed and profit margin is added by the importers. So rate of tax and profit margins of the importers also affects it. After considering all these, the price of gold is determined. In the present case, the international gold rate and dollar-rupee exchange rate and custom duty worked out to increase the price of gold in domestic market. Now let us see how these factors affected gold price. Many foreign investors across the world invest in stocks, real estates and bonds of the countries that offer higher return. Because India is a developing country, it offers far more return on investment than any developed country. In January 2020, yield on Government of India 5-year bond was 6.3% and yield on US Treasury bill was 1.7%. You see how much difference is there in yield? Yield in simple words means rate of return on your investments. When coronavirus broke out in India and the government had to impose lockdown in March, many foreign investors started pulling off their money because they thought that it is not safe to put money in a system which is facing a tough time. Foreign investors who sold their holdings in India demanded US dollar in form of payment because US dollar is the most valued currency and it is accepted everywhere in the world. A very high demand of US dollar led to increase in its price and dollar-rupee exchange rate increased. As a result, rupee depreciated and dollar appreciated. Investors who had pulled off their money needed something to invest in because no one wants to keep his money idle. In such tough times, when stock prices are falling and yield on bonds are decreasing, people head towards safe investments or safe haven. Gold and US Treasury bills both are considered safe havens. But because US Treasury bills yield started decreasing, many investors across the world started investing in gold. As a result, the demand of gold increased. Increased demand resulted in increased price of gold in the international market. Recently in India, custom duty on gold increased from 10 to 12.5%. All these factors played out in increasing the price of gold in the domestic as well as in international market. In countries like India and China, people prefer to hold gold in physical form. In Western and European countries, people does not hold gold in physical form. Exchange traded funds or ETFs are used in Western and European countries. Exchange traded funds in simple words means holding gold digitally just like shares in a demat account. In India, the concept of ETF is still new, but slowly people are investing in it rather than holding gold physically. So this was all about why the prices of gold is rising. This video ends here. I hope you liked this video. Don't forget to subscribe Finnobo for amazing new videos. See you in the next one.